Hello traders, my name is RJ, and today we're going to be looking at USD Switzerland forecast into the future. Let's start by identifying our invalidation level to have this. And there we go. Okay, now the structure we have on this chart right now is called A, B, and C, which is zigzag pattern. Okay, and the zigzag is labeled in ABC, A, B, and C, which means the wave A have 5 subwave on its own, wave B have 3 subwave, and wave C have 5 subwave, which means our analysis and what we should be looking for on USD Switzerland should be 5, 3, and 5. Now let's start by identifying the impulse. When you look at this place all the way down, you know this is impulsive wave. And after impulse, we have what? A corrective structure, which goes all the way here. After corrective structure, we have what? Another impulse to go all the way down. And what do we have again? Another corrective structure. And we have what? Another impulse. Now, this is impulse, corrective, impulse, corrective, impulse to the downside. Let's give it a label, which means in A we must have what is called 5, right? And the level of A is this. We have 1, 2, then 3, 4, and 5. Then this is 1, 2, and the subwave, this is, so which means this completion of 5 is 3 on its own, because with 3 have 5 subwave on its own, with 1 have 5 subwave, with 3 have 5 subwave, and with 5 have 5 subwave. This is 1, 2, and the bigger wave. This is subwave, and this is 3. After 3, then we have corrective structure 4. Then we end it here with 5. Let's change it to now. It's not too big. Yeah. So this is 1, 2, 3, 4, and 5. Okay. And automatically this gives us wave A completion. Okay. This is wave A. Guess we're done with this. Can you see how we're spotting the structure now without confusion? This is wave A. And wave B is a convergent structure of wave A and can never end be at the starting point of wave A. As you can see, this is validation level and this is wave B. What wave B form is what is called a flat pattern. And flat pattern, which means we have get rid of this 5. Now it remains 3 and 5, right? So what we are doing now is 3, which is wave B. Okay, so I don't want us to be confused. I want us to do this in a reasonable way that you will understand it. Now, what we see here on this chart right now is called a flat pattern. And flat is an A, B, and C. And the level of flat is quite different from the level of zigzag. The flat is in 3, wave B is also 3 for flat, and wave C is 5 for flat. Which means if you are going to look at this chart right now, we must find 3, 3, 5 on this chart for we to consider it as a flat pattern. Now, what we have here is what is called an ending diagonal on this side. Okay, and we're going to show you how it really like. As you can see, after the completion of the flat, the trend was broken and retest, then started going all the way down. So let's give it its level, which is ABC, right? This is A, and this is B just below, and this is C. And C form what is called an ending diagonal. You know, an ending diagonal is what? Is 5. And the rules of an ending diagonal is that after wave 1, wave 2 correct, wave 1 structure can never end beyond the starting point of wave 1. Okay, wave 1 started around its range, and wave 2 replace and never end beyond the starting point of wave 1. Now we have wave 3 A, then convergent structure wave 4, then end it with wave 5. Okay, so this is 1, 2, 3, 4, and 5 structure, which give us completion of what? The corrective structure, which is A, B, and C for flat. I should know this is weekly time frame, so it might not show as you want it to be clean, but that is what is in there. Maybe where we are done with the analysis, we can go to lower time frame like daily time frame to show you what it looked like on lower time frame. And this is completion of what? Corrective structure of this wave B tree. Do you see how we are spotting it little by little without stress? Okay, and now let's see if the trend line can stay here. Okay, yeah, and the level, because all of this is just what? Subwave level. Okay, and the level doesn't fit well. Let me remove it. And the level of this structure is wave B, which is 3, like we said, 5, 3, and 5. So this is completion of 3 structure. We're going to give it what? It level. Now we erase this because we are done with this. That is it. then we're going to give it a global, which is what? Wave B. Okay, this is wave B structure, which means we have done half of the assignment on zigzag. And after this seminar, I want you to do your own too, try to figure it out and see what we have here. How zigzag pattern appear in the real chart, which is the battlefield. And now let's move to the last one, which is what? Five wave structure, right? You must have five wave structure in this structure too. And this is not a rule, but some of the things we use to figure out wave C is not a rule. I just want to give you some updates that people barely even know. The range of wave A can be equal length to wave C target. The range of wave A can be equal length to wave C target. If you look at it, it is almost the same thing, but it is not a rule. You understand? This is not a rule that this is a must. Okay, just showing you one or two trick that we use so you can also know about it. That is it. And now let's move to the last one, which is five subwave structure of wave C zigzag pattern. And how do you know this is zigzag pattern? Zigzag pattern is what? Five. This is five structure. Three. Let me now give you this pattern. This is five. We have three. Then your expectation should be what? Five. Can you see? You should see it clearly now. This is what? One, two, and three. One, two, and three, which is five, three, and five. That's the zigzag pattern for the bearish. Right? Now, let's count the wave structure, then we'll learn about the last subwave. So we know where we are to forecast into the future. And this is a clean wave one structure, which is 1, 2, 1, 2, 3, 4, 5. 1. This is 1. Then we have got this structure, which is something similar to this. But this is just AB, AB, C, W, ABC, WX, Y, XZ. This is a triple tree pattern. I'm going to label it. Let us do the label for we not to be confused about anything. Let's change. Okay. This is wave 1. Wave 1 is what? We said wave 1 have 5 subwave. And let's give it a subwave, right? Which is 1, 2, 3, 4, and 5. It's not that we are just giving different level structure. You must see what is inside that structure before you can give it and label it wave A or wave 1. You just label anyhow. You look what is inside and you predict. Okay, yeah, this is a clean one. Wave 1. Okay, now this is wave 1. After wave 1, we will always have a convertive structure, which means this become invalidation level. And if you look at it clearly, it doesn't hit the invalidation level. The invalidation level was not hit. When you look at it clearly. Now we are done with this. Let's clean it. This year we are doing everything. Impulse, corrective, impulse, corrective, impulse, corrective. Okay? So written it is quite simple. This is what we are doing now, right? 5 for wave C. And This is a corrective structure. The corrective structure is labeled in WXYXZ. Okay, it's a triple tree pattern which is labeled WXYXZ, and there it is, which means we're quite done with these two. Let's roll it off. Can you see how we're spotting the trend going exactly as we predicted? And this become wave 2 because it is a corrective structure and never broke out of this wave 1. If you want to consider this as wave 1, you must know the rules and regulation that wave 2 can never end beyond the start point of wave 1. And now we're done with wave 2, which means out of the 5, we are done with 2. Now let's do the 3, right? Against the 3 is forming something called a diagonal pattern. All of this structure is forming a diagonal pattern. But let's see, right? Let's see by ourselves. You know, let's see what we have in there. Then we decide, okay, this is a diagonal and this is not a diagonal. We know on the level of this structure is also in 5 wave, which is 1, 2, and wave 3 headed around this range, and we're expecting wave 4 structure, and then we're not quite done with 4 because this is where we are right now. We are currently in wave 3 of this structure, and other thing that we use as confirmation that we're not quite done with the wave 3 with the subway 5, we're going to show you right now. This is wave 3 of the structure into, this is 3 and 4. After 4 we have 1, 2, 3, 4 and 5. Let's give it, we have an ending diagonal that ended this way. Okay, this is an ending diagonal pattern. Mhm. Well, let's give it its own level. After wave 3, this is wave 4 collective structure, and we have an ending diagonal and this range 2, which is 1, 2, the range y. This is 3, we have a collective structure 4, and we are going 5 now. We are going 5. Okay, which means this is 3, 4. Now we are going 1 with 5 to complete this wave 3, which means this wave 5 that we are sub wave 5 that we are currently doing, we're not quite done with it yet. Okay, we're staying with 3 of this subway 5, and you should know this is a zigzag pattern that we are trading. And zigzag pattern, we need to complete what? The wave 5 to consider it as a zigzag pattern, which means this is, let me check the level so you don't get confused or lost around this range. Yeah, okay, this should be good. And after the completion, this will complete wave 5 subway of wave 3. Okay, aha, this is where we are right now, which means currently we just finish with 3, with 4, and we are having a what? A diagonal pattern, which is 1, 2, then we have WSY3, and we have 4 around here, then we are going 5 with 5 structure, and with 5 should be below. We break the point of what? Break the point of wave 3. Alright, this is our exploitation now in the market. We are expecting wave subway 5 to complete this diagonal, and then we give it wave 3, which means there's still a lot of things to do. We're not done with wave 3. After wave 3, then we have wave 4. That is when we have a completion of wave 5, as you can see, which means we're still in wave 3 of this A, B, and C. And this should be the forecast expectation. For now, we are getting wave 3. This is our expectation now, wave 3. Then after completion of wave 3, we are going to update you with the next thing. Okay, that is it. But we just want to give you the forecast of what you might expect, like how it should be, right? So you know your expectation. This is it. After the wave 3 completion, we're going to have what is called a corrective structure. After this wave 3, we're going to have corrective structure of wave 4. Okay, of wave 4. After wave 4 correction, then we're going to complete this 5 structure, which will break the point of wave 3 that we have not yet hit. Just showing you the forecast how it's going to be. And after we complete this wave 5, that is when we're going to give it its label of what? Label of zigzag pattern. Label of zigzag pattern, which is C. Okay, which means we are not quite done with our structure yet. This is what we're still expecting in the market. Okay, after wave 3 completion of this diagonal pattern, which is an end diagonal, we're going to have a corrective structure to the 4, and then we're going all the way down to break the wave 3 point, which will complete wave C. You can see where we are still going now, that we still have a lot of things to do. Okay, and that is it. That is what we have for now. And if there is anything that changed, we're going to update you immediately. That is it. And our expectation now is that we are expecting wave 3. Okay, after wave 3, then we're going to update you with what we have next. And you should know that the rules of a diagonal is that wave 4 can break the end point of wave 2. If this is to be a diagonal, we should put our validation level here. If this is a diagonal, for we to know if our diagonal is correct, because it's not about you just trading any way you like. It's about you looking at the rules and regulation. And the rules and regulation is that wave 2 ended point, this wave 4 cannot go to this range unless wave count is wrong. That is it. And one of the things we do at a lot of Ninja is that we always have swing validation level for it to be on the right side of the market, because sometimes the market might do something like this, go all the way up, break this stop loss around here, then you lose. After you lose, breaking this stop loss, then the market will start going as you predicted. It happens. But for you to, most of the time, that is what happens. And for you to be on the safer side, watching the market make us know that that is what happened most of the time. For you to be on the safer side, you have two validation level. One here, one will be around here, and the second one will be around here. Okay, for you to be on the safer side of the market, because losing is not something that is easy to watch. If you have two invalidation level, this will be your maximum invalidation level. This maximum invalidation level, like the market is not going to, go above this place. For if this wave count want to be counted as a right wave count, then this is the maximum invalidation level, and this is normal invalidation level. Okay, for this wave structure of an 90 diagonal, this is the normal invalidation level, and if it break out of this invalidation level, then we will know that okay, I think it's forming something else. Then we do the analysis again. You understand? But it will not break the two invalidation level at the same time. No, that is it. But it's possible that it might likely complete this structure or break this invalidation level and start going down as we predicted. But all we know is that what we've been looking for on USD Switzerland right now is selling opportunity. Should be looking for selling opportunity. We are going to sell. That is it. And this is our what is likely to happen in the market this coming week. This is what is likely to happen in the market. And if it doesn't happen, you should know that you have your two evaluation level set. You're still in the right way. And this is just the minimum target. Okay, this is just the minimum target we have. Just set it around here. Okay, and so this is just a minimum target. Another thing we use as confirmation is MACD. We've talked about MACD before with you guys. Okay, for you to know. Okay, this is it. We look at this structure we said, which is 1, 2, 3. After this with 3 and 4, we started having a low volume. Okay, the volume started to lose its momentum after this wave 3 right here. This is wave 3 all the way here. Then we started to lose volume. It kept going down. When you look at the market, it kept going down, but the volume keep going up. Okay, instead of the volume to keep going down, which means we are losing momentum. All right, and that gives us confirmation of this wave 3 and corrective structure of wave 4, and we're expecting wave 3 of this wave 5, which is an ending diagonal. Once we complete an ending diagonal, we have a corrective structure and we go all the way down, and that is it. And that is how we use MACD as confirmation. And I think this is all we have for now. The market have your twin validation level set, then you're on the right way of the market. Okay, that is it. And another thing that gives confirmation that we are going to sell, if you look at the candlestick are weak already. All the way from here they are weak. They're just trying to do the corrective structure. And after the completion, look at what we ended with last week. This is last week candlestick ended with a what is called a dragonfly. This is a dragonfly. After dragonfly, you should expect, look at this. Similar stuff is here. We have a dragonfly around here. Let me show you guys. Similar stuff is around here. Around this flag I'm showing you right now, we see a dragonfly. This is it. The dragonfly. After the dragonfly, we see what? A bearish. Dragonfly, a bearish. Dragonfly, look at this waveform. After the dragonfly, what do you see? Bearish. And this is weekly time frame, which means the candlestick is quite strong. The candlestick is very strong. You can use it as your confirmation to sell at this range and put your validation level here on here. And this is the maximum invalidation level. Okay, we have minimum and maximum, and I bet you that 90% of traders don't do this. They don't have minimum and maximum invalidation level, but we do at a lot of Nigeria because we want to be put in the right way of the market, okay, and risk the right way. And this is our expectation now. This completion wave 4, and this is wave 2 right here, then 3, 4, respecting 5. That is our expectation for now in the market. And have a good day. Adios. Let me be like Spanish. Adios. Is it Spanish? I don't even know.